bunch of orders, right? With a bunch of orders. We're only now starting to see folks like MoneyPoint, Kuda, etc. actually give businesses POS machines that have the menu on them so that reconciliation is automated, right? But at Peppermint, what we've seen is that that is just one step in a larger configurability journey that is missing from payments today. So imagine a world where your business logic is actually built into your payments, right? Imagine where you can actually configure, revenue shares and vendor splits and locked scoped balances, right? Imagine a school being able to take 5 million naira from a parent and a student can spend from that, but we know that 2 million or 3 million can't be touched by the student because that's going to be automatically debited for school fees or for hostel fees, right? Imagine all the beach clubs in Lagos and all the nightclubs and all the raves that have tables. And those tables basically require a minimum spend, right? Today, there's no way to configure that in your payment experience, right? So what basically happens is, again, you just input an amount, you collect a payment, and then you spend 3 weeks doing the reconciliation for what belonged to whom, was spent by whom, should go where, and what share is mine. And so I think that the question of when do payments actually graduate from an operational concern to a growth concern, I don't think they've even graduated from an operational concern yet. We haven't fixed the operational side of payments because for most payment experiences in Nigeria today, business logic is not tied to the payments infrastructure, right? And once you actually do that, then you see that growth is the natural next step, right? So imagine you're able to actually build that business logic into the payments experience. Now we know that Dami is our most loyal, member. Dami loves the raves. I've never seen you at a rave, but maybe you love raves. Maybe you're there every Saturday. Maybe you spend 100K on average. Maybe you love Johnny Walker. And so next time you come and I see that you've checked in, I can greet you with JW complimentary cocktail and you feel seen, right? And then you drive growth because then you drive loyalty. And so, yeah, that would be sort of like my response where it's that like fundamentally, we still need to fix the operational side of payments. And if we fix that by actually layering business logic onto payments, then growth comes naturally.
All right, thank you very much for the response. I really appreciate it, Ekene. So thank you so much. So I'll move on to Adewale now. Okay, so Adewale, my question is, why should businesses start seeing payment infrastructure as a part of growth strategy rather than just back-end operations?
All right, thank you, Dami, and good morning to everyone on the call. Ekene, good morning, and Ibrahim, good morning. I hope I'm audible.
Yes.
Yes.
All right. Thank you. All right. So just like Ekene had mentioned, payment in Nigeria is still basically operational, but for businesses, when we talk about payment infrastructure, I think it's also important for us to, operationalize that word. It involves just more than just the movement of money, from one person to another, or even from one business to another. So for a payment infrastructure, we are talking about the entire ecosystem, that facilitates movement of money, securely, reliably, and also efficiently. So it's more than just you want to pay A to B. So it involves everything, every infrastructure, every business, every partnership that makes that possible. So we're looking at your payment gateway, for instance. We're looking at your API. We're looking at solutions like your virtual account. We're looking at your collections platform. We're also looking at fraud management, which is very important. We're looking at reconciliation. We're looking at settlement, your settlement engine. We're also looking at, platforms like maybe your recurring billing systems. Apart from that, there are also some other consideration, that comes into place. One, you're talking about your processes. You're talking about your compliance. You're also talking about your scalability and interoperability too. And then finally, which is very important, is the customer or the user experience. So all this, businesses need to think of payment as being more than just, the exchange of value. Payment, the payment, all payment infrastructure, should be seen as a growth, strategy. There are 5 points I would just like to highlight, for the sake of time. First, payment experience, drives customer conversion. Just like you have mentioned, Ekene, that if I want to make payment, maybe at my first attempt, I couldn't make that payment. Maybe there were some issues. I need to process some refunds, and the refund is taking some time. Or I tried again. Oh, they say, oh, it took me maybe about 3 days for that payment to be reversed, to my account, and I have to try again. Those are experiences. If you have a business that you're patronizing and you are having such experiences, you either move to another business with an efficient system, or you reduce the number of time you go to that business to do what you want to do. Number two, we talk about scalability, which enables business expansion. If your payment infrastructure, if you don't think of your payment as being more than just the movement of money, in terms of scalability, you're also going to have some challenges. It determines, number one, how quickly does your business grow? How do you respond to growth? Imagine a school that is collecting about 5,000 payments per term, for the first time, and that, astronomically grows to about 50,000 payments, per time. If you are not, if you don't consider payments, just being more than, an operation, then you have problem, because you are processing, you're used to processing just 5,000 transactions. You're now processing about 50,000 transactions. If you're not ready for that, it means that there will be a high rate of payment failures, which is going to, call into questions a lot of things about your system. Number three is that when you take payment as more than just, the movement of money, you're looking at the data that is being provided by payments. You have enough data in terms of insight. You want to know what are your peak periods, for your businesses, so that you can manage that. You want to know what is the, the preferred mode of payment that your customers would like to use when making payments, so that you can also optimize, that for them. Number four, an efficient payment system improves your cash flow. If you get your settlement instantly, as we have some businesses, some payment companies do today, transactions are done, and before the close of business, you are getting your payment. It enables you to, your finance, you can plan, your treasury management it's good. You can pay your vendors quickly. You can even restock, some items into your, your business as quickly as possible. And then finally, if you also think of payment, no business is an island. We also look at it in terms of your partnership. You have to have other partners that you're working with within the ecosystem to make all this happen. So you have to partner. So today we see banks partnering with fintechs, even government organizations today. For revenue collection, we see that they are going way more of partnership with fintechs. They want to make that collection smoother. So these are just the 5 quick points, that shows that payment, should be taken more like a growth strategy, not just the movement of money. Thank you.
All right, thank you so much, Adewale, for those fantastic points. Honestly, I think I've learned one or two. And just to go over what you said, basically about businesses seeing payment infrastructures as part of growth strategy, and the major 5 points you've mentioned, so people can get more information, is a payment experience, which is really, really very important. People have to have a good experience. The scalability and the movement of money, that's the data insights, the efficient payment system, which is really very important. If you don't have a good payment system, people will definitely back out. And also partnership, as you've mentioned. Thank you very much, Wale, for that. Okay, thank you. So I'll be moving to Ibrahim right now. All right, Ibrahim, I just want to ask, from your experience, what separates business that scales smoothly from those that struggle operationally with payment? Thank you very much, Ibrahim.
Good morning again, Damilola, and good morning to everyone. Thank you for having me here. And we're here to learn, and quite a number of insights have been provided by Ekene and Adewale. So when you say what separates business that scales smoothly from, those that struggle with payments, based on everything that has been said this morning, businesses that scale, they are businesses that have actually had a plan about what they want to achieve. How they want the payments to go. So when you start a business, or when you are in a business, you already done an MBA that what are the things that you want to achieve? You want easy payments. Adewale mentioned quite a number of that. You want to, achieve clean reconciliation. How do you make reconciliation when payment comes in? How do you distinguish who actually paid? And you factored it. And when you have factored it, all these things, it means that your profitability, you're also looking at that, because when there is a leakage, definitely that affects your profitability. Again, you look at what are the mode of payment that people want to actually use to make payments in your location? And that's looking at multi-rail. You look at, you're not just basing it on the fact that, you assume that, maybe the people that will be coming or customers that will be coming to patronize you will just be using card. You must make preparation for instances where you have a multi-rail platform where people can actually use their cards. They can do transfers. Sorry, please, am I still audible?
Yes, sure.
Okay, thank you. So you can, they can actually do their transfer. You have the virtual account ability. You have the QR code ability. And then, you look at it again. We have a system in Nigeria where infrastructure is a big problem. You have to look at the option of how do you fail over. If there is a problem, if there is a problem with a particular payment platform, how do you automatically maybe fail over to another option whereby customers are able to, do transactions? And again, Adewale mentioned something about, when customers drop off, for instance, and they find it very hard to come back to your platform because they have plenty of options actually. So, for you to scale, you must build in your payment infrastructure. Even transactions are consummated, and then you don't even have a leakage in terms of your revenue, in terms of profitability. That is actually ensured. And I think that's actually what separates businesses that scale, even from those that struggle. If you look at, some of those that struggle, they depend on maybe a single payment point, point of sale, and they do not even have any options. You see that, when there's a delayed transactions or maybe delayed payment system, it becomes a problem for the organization. So I think it's embedding the payment system. That is actually what we help in terms of, scaling with payment. Thank you.
All right, thank you so much, Ibrahim, for that. Thank you so much. All right, basically now with the points we've gotten from your session, so basically what separates business that scales smoothly and those that struggle operationally with payment is just having this embedded operational system. It means that you have to have a good operational system and also profitability and easy payment. I'm sure that if most of these companies should put in this into their system of daily operations, I'm sure that they will not be able to struggle with operational payments going forward.
Not at all.
Thank you so much, Ibrahim. All right, just to make us smile, posts today's are looking so wonderful. From Ekene looking pretty, Ibrahim looking handsome and suits, And Wale also with a smile. It's so nice to have you guys here. Okay, coming back to the pretty Ekene again. Okay. All right, Kenny. My second question is what payment related challenge surprised you the most when conducting research to build Peppermint? What was like the thing you were not expecting and you're like, oh no, this is like an important challenge that you had to go through?
Well, first off, thanks for the compliment from a also very beautiful Dami. Love your smile. But yes, so yeah, so many challenges, actually so many interesting challenges. I don't even know where I know where to start, but because of time, I'll tell you guys just one. So I was shocked at how long it takes businesses to do reconciliation, how long and how painful, right? And so for pretty much every business we talk to, there's this like there's this massive gap between the transaction, right? And you validating the transactions and you actually then knowing what money you've actually made from the day or from the event, right? So I'll give you, and then it gets even more complex if you're working with partners. So there's a business we spoke to that works with, and it used to actually work with up to 10 vendors at a time. But because reconciliation used to take them 3 weeks, all of their vendors abandoned them, right? Because basically what was happening was, as a vendor, because I'm not getting paid for 3 weeks, I basically have to I have to basically find money to fund my next month of operations, right? Because think about it, like I've sold, this is the money I'm going to go use to buy more. This is like my working capital, right? To buy more stock, to pay my staff. You're not going to give it to me for 3 weeks. So now I need to go find money to run my business, right? And so they basically just stopped working with this business, right? Because what would happen is, again, you're working with vendors. So one, you can't let them use their own POS machines or their own accounts because you're taking a percentage of their transactions. If you do that, then you can't really guarantee that they're not doing some things offline or they're reporting all the sales that they made. So you give all your vendors their own POS machines, right? But their POS machines are under your name, right? So they all collect payments. And for eventually, this business I talked to actually not only gave them their own POS machine, but also the cashier to collect the payments because they wanted to make sure that no payments leaked, right? Then after the day, you then go download all the bank statements, upload them to Excel, and then start applying the percentage rev share to every transaction. Okay. And then by the next morning, some of those payments will reverse, right? The vendor will come and tell you, actually, I had these 5 and they didn't reflect. And so now you have all of that to tease apart. And these guys were losing, I know one incident, they said they lost 30 million, right? Just to all the discrepancies, because there were some issues with the POS machines. And so they weren't actually like linked. They weren't, for some reason that day, it did not match, the POS machines weren't matched to each vendor. So they just had bank statements on transactions. And then they basically just had to ask everyone, like, did you do this transaction? Did you do this transaction? And eventually there was 30 million worth of discrepancies, and they basically just had to cover it or risk like the reputational damage and all that good stuff. So as of today, this business who we actually now work with, they no longer have any third-party vendors. They basically have to vertically integrate their whole business. They now have to provide all the goods and services. That is not their core competency because folks just won't work with them anymore because it takes too long to get their money. So that was one of many, many, many interesting things that I observed that businesses struggle with. And again, as I mentioned in my first response, the root of that issue is twofold, right? Number one, the layer connecting payments to the actual order is missing. And then second off, the layer for if I work with outsiders, with third-party vendors, if I have any sort of revenue share relationship with third parties, right? Being able to do that programmatically through the technology, through the software, and not only the transaction programmatically, but the calculation of what is due to whom and the payout to go out automatically to who it's due to. a lot of that is missing. And so we've been able to fill that gap, but it's been nonetheless interesting to sort of learn these little nuances that businesses have to deal with. Yeah. Thank you.
Thank you so much, Ekene. That was a really, really interesting explanation. Honestly, basically, what you talked about is how long it takes to do reconciliation, which is one of the important payment issues that most of our businesses face. So I just want to know, have you been able to resolve this? How has it been now? The 3 weeks duration. I think it should be faster now for the business.
Oh, of course, the business now uses Peppermint, and the money's paid out as soon as the period ends, right?
Okay.
Because the system is able to track it connects orders to payments, and not just orders. It connects the guest, so the person making the payment, to what they ordered, to what they paid, and it calculates automatically what shares due to the organizer, what shares due to that vendor, and then it automatically pays out each party the sum of their share. So
wow, that's very sweet. Well done, Ekene. Thank you so much for sharing this. Thank you. All right, I'll move on to Wale now. Okay, Wale, please guys, you can start dropping your questions. If you have any questions, please, for Ekene, for Ibrahim, and for Wale, you can drop it in the Q&A section. All right, so moving on to Wale. Next question for you is, what are the signs that a business has outgrown its current payment setup? What are the signs?
Thank you, Dami.
Okay.
Well, there are several clear indications or indicators that would show that a business has outgrown its current payment setup. Just like I mentioned first, one is increasing transaction failures or downtime, especially during peak periods. When your payment is beginning to struggle under your transaction volumes, it's a signal to tell you that your infrastructure is no longer scalable. That's one. Number two, we've mentioned that, and I think it can be overstressed, which is reconciliation. If your business is small, at that point you can maintain manual reconciliation where you have a team that would download your statement into Excel and try to match between records, maybe using an item that is common to both records and things like that. You can even, I've seen instances where people sit down to manually match records between 3 records or even about 4 records, trying to do that manually. At that point, when you begin to scale, where your business had outgrown that, it becomes an issue. So you have issues where maybe transactions are done today, and you're unable to settle your partners, maybe until maybe 3 days later, 4 days later, and you begin to give excuses. That's another indicator. The third one I would also talk about is the flexibility of making payment to your business as well. If you only support cash payment, for instance, or maybe just card payments, what about, today we know that a lot of Nigerian users are switching from card payment to pay with transfer. If your business is not supporting that, or there are some other payment, methods that your business is not supporting, then you know that it's time for you to scale. You need to start using a platform, that support multiple payment options, not just with card. I've been to somewhere and they're saying, oh, we only accept payment with card, and unfortunately, most people don't go around with their card, due to, one or two things around security. So they prefer to just, make a transfer to you. That's one. So you have to look at it. Another factor I also need to just emphasize on that option is, for Nigerian today, if you look at, Nigeria as a whole, one thing is very important for us, which is in terms of the unbanked, You understand, in terms of the unbanked. So if you have a payment, platform that does not accept, transaction, I mean, that only accept payment with internet-enabled device, that could also be an issue, because it means that for your business, you are not, allowing people that are, currently unbanked, to be able to make payment to you. Another one, sign would be maybe expansion, difficulty. If for instance you're onboarding, people are unable to onboard, you want to open a new branch, or a new outlet, to support your, I mean, for your business, how quickly are you able to do that? And then finally, I'll look at it. The final thing would be, you have poor visibility into your transaction reporting. You don't know your peak periods. You don't, have a consistent cash flow, and your analytics. You don't have any form of analytics, in terms of your businesses. You have to maybe even rely on third party for some data on some of your transactions. You don't know, your customer behavior. I mean, what's the behavior? What's their preferred mode of payment? Immediately you start seeing some of the signs. They are telltale signs to show you that, you need to expand, in terms of, how you currently collect payments from your clients. Thank you.
All right, thank you so much, Wale, for those information, which has really given me much idea about this. All right, basically the signs that shown that your business has grown, the current payment setup shows that you're still doing a manual reconciliation, you're still having a delayed settlement, then also flexibility of payment. That you must have different rails, not a particular card or transfer, like you said. And basically, now that we have much people in the country going towards transfer at the moment, having different rails, innovative rails that people would really appreciate to make payment from. Then also expansion difficulty, like you said, and poor visibility for transaction reports, which are really, really very, very good signs that the business has grown its payment setup. All right, Wale, before I leave you for this session, we have a question, not like really a question. There's someone here who wants to integrate into our platform here, is trying to explore the fintech API integrations and would like to speak with someone as regards the API access. So I think that works with you. So we'll just drop the information here so they can reach out to our support team to give you necessary information and put the person through accordingly.
All right, thank you.
All right, thank you, Wale. Okay, sorry, Ekene, coming back to you. Sorry, you just have a question before we move on to Ibrahim. So the question, Ekene, is what was built for the business that had reconciliation as a key pain point? Does it serve as a payments ledger system?
Yeah, great question. So what was built is Peppermint. They basically started using Peppermint. And so I guess you could see us as because we enable businesses to build their own closed loop payment network. So you could see us as like a ledger, right? But the ledger's not necessarily exposed to them, but they're able to build their own branded payment network, basically issue a virtual payment method to their guests, their members, whatever segment is patronizing the business, and then issue another software-based payment collection device like ePOS to themselves or their vendors, and then they transact, both parties transact within that closed ecosystem, which is what allows the perfect reconciliation.
Okay, thank you very much, Ekene. All right, moving to Ibrahim. Second question is, how have customer expectations around payment changed in recent years?
Okay. I mean, thank you very much, Damilo. Has customer expectation around payment changed? The answer is yes. It has changed, and I mean, we should know that payment has moved from just functionality, I mean, to experience and trust. If people don't trust your payment, and I think we've been emphasizing this all the while, if they don't trust your payment system, it's really a bad sign that you are not growing. So, I mean, and I would attack this in three different ways. Number one is that speed is now default for them. That's one of the changes. Speed is default. How do you process my transaction? How, I mean, by what means? Is it instant or near instant or even confirmation? I mean, customers, I mean, don't actually, it might not just be instant settlement, but the fact that you are able to confirm my payment, it's something that will bring confidence. And like I said, it has moved from just functionality to customer experience and trust. They must trust you. And then, when there's a delayed confirmation, it is perceived as failure. There's no two ways about it. You can imagine somebody coming to you and say, no, let me call my madam or let me call Oga for me to confirm. So that is even not part of it nowadays. I mean, it's not something that anybody wants to even try. I mean, the second one again is that the tolerance for failure is very high. One failed transaction can lead to abandonment. It can lead to, I'm not actually coming back, or I'm not even doing the transaction anymore. You can imagine somebody coming to your website to make purchases, and then the first time he fails, the second time he fails. I am sure personally I for one, I won't even visit your site anymore, because I can't guarantee that your payment rails are doing well. And that's why you need to give people choices. And that's the third thing look at. Our customers, they have changed in such a way that, you have to segment them into different rails. Number one, who are the people that are using the transfers, for instance? Probably those who are cost sensitive, customers who are cost sensitive. So you must take note, you must consider them. And those are the expectations. Those are the things that have changed in recent times. Cards, for convenience, like just dip in my card and I'll just make my payment and boom, my transaction is done. For those that use QR, they don't have to carry anything. You don't have to carry wallet. You don't have just your mobile phone. Today, an average Nigerian, the fact that we're talking in Nigeria, excuse me, it means that an average Nigerian goes around with his phone. So with a QR payment, for instance, you're just going to, maybe do a snap and then your payment is done. So the expectations have changed. They want different choices. They want things that they can actually make choices from. For one, I think cash is not even an option nowadays. So your payment system must be top notch. People who carry card for convenience, people who do transfers, those who are cost sensitive, and then you must consider them. And then so the customer expectation definitely has changed. And, payment is now part of your customer experience layer. It's something that when you are looking at payment, you are also factoring the customer journey in such a way that, it gives a very good customer experience. It's not just finance. When we talk of payment, maybe in those days, you're talking of, maybe you're embedded. But today, it is not just finance. It's not just speaking to the financial part of your business. You're looking at the customer experience as well. So that at least when customers come and they have a very good experience, definitely there will be a repeat. And of course, the bottom line is revenue. The bottom line is profitability. And we need to also work, in consonance with the customer expectations. Thank you so much, Damla.
All right. Thank you very much, Ibrahim, for this wonderful point. So basically, like you said, customer expectations have changed, which is basically very correct, which I agree with.
Definitely.
You mentioned 3 points, which is the speed, tolerance for failure, and choices. But I have one objection. I understand the choices. I think Nigerian payment system has really done a good job on bringing up different payment rails to ease transactions now. Definitely. But I feel we're still having one particular issue, which is the speed. Because that particular speed, because we have most people initiate transaction, and because of the speed just drop out, most especially for web transactions or even cards sometimes. and the failure rate is also increasing too. Do you think we've really done better with the speed and the tolerance for failure, basically?
Damilola, the truth of the matter is that we're growing.
Okay.
Say we've done better because we are not where we were 5 years ago. I mean, the progress we've made today, we've done better than where we are. Are we there? No, because I mean, there's always opportunity for us to grow, and that's why we explore different options. I'll give you an instance. For instance, the virtual accounts that we use today, were we using them about 5, 6 years ago? No. But today, because of the need, because of the customer expectation, and the fact that customers actually want speed, and that's why virtual account was developed. And then it has eased payment. Today, about 4 or 5 years ago, if you want to make transfers, you make transfers into the main account of the owner of the business. And of course, if the owner is not in the store, it means that there must be confirmation. Somebody will have to do that confirmation. But today, with the use of virtual accounts, you are able to make transfers and then you get your confirmation instantly. And again, it settles into the main account. So I think we have moved from where we were previously today, but can we do better? Obviously, yes, we can do better. Thanks.
All right. Thank you very much, Ibrahim. All right. We're moving to Wale now. So Wale, my quick question: how does the right payment infrastructure improve operational efficiency and cash flow? Can you hear me, Wale?
You're muted.
You're muted.
Sorry, I was muted. Sorry, I didn't realize that. So when we talk about the right payment infrastructure, we're looking at a payment infrastructure that simplifies and automate critical financial processes. Very important. It simplifies it and also, automate those processes. For operational efficiency, automation, it reduces, manual intervention. I've mentioned instances where, payments are done, running into billions, and you have just a set of, or a group of operation staff, who would manually, download all this into Excel sheets and, start, to run the reconciliation manually now. There are a lot of challenges with that. One, if you look at it in terms of errors, whatever is manual is very, very prone to error. So they are bound to make mistakes. There are instances of maybe a customer is supposed to be settled once, the customer is settled twice, so the business itself, they start looking for how do we recover this money that has been settled into the customer's accounts. That's one. If you're looking at it, you are looking at it in terms of also, your settlement tracking. We're also looking at it in terms of your transaction monitoring. How are you monitoring your transactions today? Are they manually being monitored? For some businesses, it's even the customer that would call in and say, "Oh, I'm trying to use, your platform, and I'm getting this error." If such are actually automated, it's not the customer that's supposed to be calling you, to tell you that your platform or your payments are not processing. I mean, you should have that, that visibility at every point in time, especially during your peak period. You must be able to identify your peak period. What are my peak periods? And then also automatically, monitor, the processing of your transaction. So today we have businesses that are installing, transaction monitoring alerts, that below this specific threshold, there should be an alert triggered. And then you also have businesses that even have someone, monitoring those alerts, to promptly act on them to ensure that they don't turn into payment frictions. As you know, payment frictions leads to abandoned cart, customer churn, and operational inefficiency. Also looking at it in terms of your reporting, your monitoring, your reporting, it minimizes human error. The speed of your financial operation also is really, really high up there. And from another perspective, you look at it from the time in terms of cash flow. If your payment infrastructure is efficient, it also means that you have an improved cash flow. If settlement is done on time, businesses can plan, very efficiently. Ekene mentioned, the instance of, a company losing all of their vendors because they don't get their money in time. That is inefficiency. If they get their money in time, their vendors are paid in time. Even their payroll, they're able to manage their payroll in time. Their inventory as well, they're able to manage that in time. They can track, their incoming funds in real time. They can predict, their liquidity more accurately. They can manage their working capital, effectively. Once your payment infrastructure, it's fine, it's in place, it's automated. For example, if you look at, if a business receives settlement faster and reconciles, reconciliation are automatically done. All these things that I've mentioned becomes very easy for the business, and then the business can focus on, more important thing. I think ultimately, a strong payment infrastructure, it will help the business to improve, on financial control and also their operational agility. That's all. Thank you.
All right, thank you very much, Wale, for this lovely information. Definitely, and I agree with you. If all these infrastructures are in place, definitely would have an efficient cash flow and good system, payment system. So basically, a good infrastructure would simplify and reduce any stress that you have as regarding payments or the business. And monitoring transactions efficiently. If you have a good system that monitors transactions and trigger any information or alert, and it's being worked on also, not just triggering, whatever is being triggered is being worked on and looked into. And also very importantly, like you and Ekene have mentioned, settlement without delay. It's like very, very important for all businesses because that's what's really needed for them to move on with their business for their daily activities. All right, before I move on, Wally, we have a question. So the question is, so far, what can Zest do or what have they done differently to improve payment experience for the ecosystem?
All right, thank you. Thank you. All right, a lot, I would say, that we've done at Zest. First, I want to talk about our payment gateway. One of the things that we've achieved with our payment gateway is that it's multi-rails. We have multiple payment options on our payment gateway, which makes it easier for business to collect. One of the things I would usually say is this, which is very critical, for businesses when considering, their payment infrastructure or their payment, partner. Can your payment or can your customers, pay easily? And then again, the second thing would be, can those business or your business receive your fund quickly? Also in terms of the scalability. So we have a multi-rail payment gateway that supports multiple options for payments. We have pay with card, pay with transfer, QR, USSD. We have some OEM wallets also that we've integrated into our platform. We as well have Apple Pay and Google Pay, recurring payments, direct debit solutions, just name it, depending on your use case. We also have virtual account, both the dynamic and the static virtual account, depending on your use case. We have with the virtual account, we also have ledger system. We've worked with a number of businesses that we have solutions for. One of the things that we usually would do is that we have our off-the-shelf solutions, right? But we would not mandate you to say, okay, come, you have to use our solutions as they are. The question usually is, do they meet your immediate business requirement? And then if you're also looking at it in terms of, the future, how well will, Zest support you, when your business scale? I think to a very large extent, we've been able to achieve this. We have, given an instance, we have a customer in the oil and gas sector that came to us and said, okay, yes, we need, a POS terminal, yeah, for collections at all our stations. But more than that, we want a terminal, we also have a payment system, like a loyalty system where we are giving, some of our driving customers loyalty card, that they need to make payment for, make payment with, right? So before they met us, they've been talking about how they definitely have POS terminal for collections, right? But they were also thinking about how do they get additional terminal, to be a separate terminal apart from the POS, maybe like a mini device that they would be using to collect those, type of payment. They have vouchers, that they give to their customers. They also have more like their loyalty card, which would ordinarily would not work on the normal POS terminal. So when we saw that, we said, oh, you don't have to, buy, terminals. I mean, they have more than 500 stations across Nigeria. So if they're buying terminal, I mean, another terminal that, I mean, to handle that, it's cost a lot of cost for them. So what we did in order to for that solution is that the terminal that we have, that's our POS. We had to work, our engineering and product team had to work on a solution that allows them, today, if you walk into any of the stations today, you can make payment with any of the two payments methods, whether you want to use, the virtual card or the loyalty card, or you want to use your regular bank method for that payment. I mean, it's one of the things that we've done, and we're open to other businesses as well. We are constantly, looking for ways to support business to accept payment easily, and not just to accept payment easily, also in terms of reconciliation too. We have done a lot of work, in terms of that. One of the things we've noticed is that when businesses are, especially during the period of integration, there are a lot of consideration that they don't put in place. I mean, what is foremost to their mind is, I want to collect payment. They're also not thinking about, after I've collected this payment, how do I do my reconciliation? What are the things that I need, for this reconciliation to happen, and all that. So all this will be able to, provide at Zest. So again, I'm going to Damilola is going to has dropped my contact on the chat. You can also reach out if you are a business or you have businesses that you want us to support your payment or accept payment on your behalf. We are willing to do that. Thank you, Damilola.
All right, thank you very much, Wale. The initial attendee already dropped this email address that was requesting to integrate into our API. So
Okay.
we've noted that also. Thank you very much. All right, thank you, Wale. I'll be moving on to Ekene. All right, Ekene, my third question for you. How do poor payment experiences affect customer trust and retention from a founder's perspective?
That's a great question, Dami. I think Timmy and Adewale have shared a lot of insights around sort of, I don't want to repeat what they've said, so I'll just summarize kind of where I align with them, and I want to add something extra to it. So I think the most obvious way that poor payments experience affects, your business is like trust, right? Like, as I think it was Ibrahim that made the point around how it only takes a few failed payment instances, and then you just lose the customer completely, right? And I love telling this story because I think people take for granted, like that the way we've actually built payments is fundamentally unreliable. That might be a controversial perspective, but I'm happy. I'm happy to discuss. But this is part of what inspired me to start Peppermint, right? Because one day I went to Chicken Republic, and I'll skip all the details, but after a citizen's meal, I had this epiphany. I realized that, like, okay, maybe the problem with payments in Nigeria isn't about digitization. I think for many years we've all just been chasing like digital payments, digital payments. Let's try tap. Let's try scan. Look over here, they're doing this thing. Like, let's try that. And then we have all this like omni-channel, here are 20 different ways you can make a single payment. Fundamentally, the customer doesn't care about that. They care about just like a reliable payment. If you told people they could like nod their head on a card and the payment would go through 100% of the time, they would do that. They would just nod the menu, right? Like, so yeah, like I don't like we keep optimizing for like more payment methods, but like each additional one is not materially more reliable than the previous. And what people actually care about is reliability, right? So if like the light switch in your house only works 1 in 7 times you try to turn it on, you're going to change it, right? And so that's why people are using different payment methods, not because they like enjoy, QR codes, right? And so when I dug into the question of like, okay, so like, why are payments fundamentally unreliable in Nigeria? It comes down to kind of like 2 or 3 different things, right? So when you dip your card in a POS machine, right, that little chip is effectively a SIM card, right? If you're using a Visa card, Visa basically calls your bank, right, and says, hey, is this Dami? And does Dami have money? Your bank responds, yes, this is actually Dami, and Dami has money. Then Visa calls the merchant's bank, the business you're transacting with, and says, oh, she does have the money, clear the transaction. And then the bank calls Visa and says, cool, like transaction cleared, this is the value of it, blah, blah, and fees, blah, blah. And then Visa does all the calculation, settlement, clearing, right? So that's like a simplification of basically what happens in those nanoseconds that you dip your card in a POS machine. And so the issue is that every single time a call, what I've referred to as a call, is made, you need enough network uptime for all those messages to be sent. And you need that network uptime from the telco and from all the banks and from the card network, right? So if at any point any of those messages are passing, any single one is down, the whole payment fails, right? So you might be using CUDA, you might be using Stanbic, Stanbic is up, but the merchant is using Zenith, Zenith is down, or Nibs is down at that moment, or, right? So there's just so many points of failure, right? And so that's part of kind of, not part of, that's the major thing that inspired Peppermint. The idea that how do we build payments that are fundamentally reliable, that don't rely on that don't involve so many potential points of failure, right? And so what that looks like is, we got to get the balance into the system. The money needs to already be there, right? And we basically just need to, for now, need just a Wi-Fi or data network, and eventually actually be offline compatible, right? But to your question around trust, it's like, people, as Ibrahim pointed out, people want speed, they want reliability. I agree with Dami. I'm not convinced they want choices. I'm not sure. I think people just want it to work. And so we need to focus on reliability. And then I think like users and customers and citizens and folks will be happy. Now, I want to add more color to the retention point. I think we often talk about and think about retention as what should we avoid doing so that people stay, right? Like, let's avoid failed payments. But retention is actually something that we should look at as retention is like a positive thing. It should be more about what can we do, like not what should we stop doing. Let's stop having failed payments. What can we do to actually get customers to come back, right? And I kind of alluded to some of this in my earlier responses where I talked about, today, a lot of our payments infrastructure does not give businesses the room to build their business logic on top of the payments, right? So imagine a world like last week, one of my favorite restaurants, the only place I eat Nigerian food from, besides my mother, is yellow chili, right? I love yellow chili. Shout out to yellow chili. And I get the same thing every time, right? And like I like to eat my soup with stew. But sometimes when they give you stew, they just give you a bunch of oil and it drives me crazy, right? And one day they did that. They gave me too much oil. And I was like, I remember because I was paying by transfer. And this is kind of embarrassing to admit to, but like my transaction feed was just like the limited, the limited, the limited, which is the name of the yellow chili account because I was just ordering way too much yellow chili. But I like remember thinking to myself, like, I spend so much money at Yellow Chili. Like, how have you guys not now? Like, you should already know that when I order, don't like, oh, don't like shorten my ration by like loading my stew with oil. Like, I'm a regular. You should know me and you should treat me accordingly, right? Businesses can't do that today, right? Again, because my payments is not tied to my customer base. It's not tied to my business logic, right? But last weekend, there was an event that used Peppermint, and they can tell you right now what the average spend per guest was. They can tell you what items sold most at which vendors, right? They can tell you exactly who came to that last event, but also who came to the one before that. And so now you have all this rich user and customer data that tied to payments that you can actually then use to proactively retain customers, right? So now you can see like, oh wow, this is Ekene. She's spending pretty much her entire salary on afang soup. Let's give her like extra meat or an extra portion of soup, or let's show her that she's seen, we know her, we appreciate her, her loyalty, right? And it's hard to do that today with the payments infrastructure we have available to businesses. They would basically, again, just need to be doing a lot of like manual stuff. And honestly, like there's no manual stuff they could do in this case because today, like your your payments data is anonymized. You don't know that Ekene paid at your business, right? Yeah, it's anonymized. So you need a completely different infrastructure to even start to think about knowing who's patronizing you. But the business owner is the one who's done the work of building the captive audience, right? But they don't own any of the relevant data. So they can't really think proactively about retention. And so that's something that we're like really helping folks think about and solve. Just this idea that payments, like payments is really, it's not just a transaction, it's a relationship, right? And so how do we sort of own that layer, own that data, and turn it into insights that actually drive delight and drive retention? And fundamentally, when you drive those things, you drive revenue and business growth. Yeah. Okay.
Thank you so much, Ekene. That was so interesting. All right, I can see you're a big fan of yellow chili. Oh, that's lovely. All right.
Yeah, that's the main takeaway from all of that.
So basically, that's the point you made, reliable payment, which is very, very important to get our customers' trust. And also for retention is tying customer data to transaction history, which is also one of the important things we need to also work on. That makes it easier for you to know one of your best customers and also do better. All right, thank you so much, Ekene. Really enjoyed that. All right, I'm moving to Ibrahim. All right. My question for you is, what role do partnerships play in helping businesses scale their payment capabilities?
Thank you very much. And I mean, before I make any comment, I just want to say shout out to Ekene. I mean, I think you guys have done a very great job bringing Ekene to this platform. And I mean, I could see the passion. I mean, I could see that she's done quite a number of research before, I mean, coming up with Peppermint. And I mean, big shout out to you and congratulations. I mean, there is no serious business, that can scale payment alone. Let's be sincere. There's no business that can scale payment. You can look at Peppermint, for instance. What brought about Peppermint is its number of years of research, I guess. You can see her examples, you can see her experience, because she had to turn that into a package I mean, whereby customers can actually retail that to even people. So you can imagine, I mean, what does partnership do for you as a business? Of course, it gives you accelerated speed to market. You partner with established payment service providers. You can imagine partnering with a Peppermint, for instance. He has done quite, I mean, she's done quite a number of things embedded in one package. You can imagine you as a business trying to, go around and start that process. You can imagine the time it will take you to market. But we have a partner. You already have a partner that you can partner with, you can quickly run to. You need a package and you're able to, do your standard. So it reduces your time, I mean, to market. I mean, the second thing again is that it reduces your cost. I mean, operational cost, because the cost that, for instance, the Peppermint has, incurred, you won't incur that again because you're going to tap into their services, you're going to tap into their real. For instance, I mean, speaking about Zest, what Adewale was talking about the multi-rail. I mean, a lot of work has gone into ensuring that you put the multi-rail in one. You can imagine as a business, I want multi-rail. I need to go and talk to the service provider for virtual account. I need to go and talk to the service provider for cards, for instance. But what you've done in Zest is that you have been able to put them in one. So a business that comes to you will definitely reduce the cost, apart from the fact that you are able to go to the market early. So those are the benefits of, partnership. And I think it's something that, can help scale your business. So partnership cannot be overemphasized. I mean, today, everybody is talking about the fintechs. You talk about the fintechs. The advent of fintechs, it has brought a lot of competition. I'm sure you all know this. It's brought a lot of competition. But rather than, and as a bank, there's a tendency of you feeling very challenged to say, oh, fintechs are out there and they are taking our businesses. But, what did we do? We had to sit down and look at how do we partner with these guys? How do we partner with fintechs? How do we, get some of the capabilities that we cannot get? And that, today the collaboration is great. Collaboration is great because as a fintech, you can't keep your money in your bank. You don't have a bank as a fintech. You are not licensed to be a bank, but you have to partner. So definitely you cannot scale. There's no business that can scale without, the partnership. What are the other things? Seamless cross-border transactions. You are able to do transactions even across borders because there are people or there are businesses or there are partners that you can experience of, frictionless user experience. By embedding financial and transaction processes into a single unified platform. It eliminates all those checkout frictions. And of course, some of these things. So the impact of partnership can really not be emphasized. You can't do it alone. You must have partners you're working with that can actually give you what you cannot get on your own. So we can't overemphasize that. And again, in Nigeria, payment is actually very regulated. And if you are to go into that, and apart from the fact that it's regulated, and Ekene was speaking about failure point. You can imagine if we're increasing, we already have failure points today. And failure points means that, at what part, the different points that your transaction can actually fit is something that can actually make you scale in that. Thank you very much, Adewale.
All right. Thank you so much, Ibrahim. Really enjoyed your session. That was a very brilliant point. Like you said, basically, you can't work alone, definitely. You need to partner no matter what to give you the best business payment solution. So like you said, just to mention just a few points, reduces operational cost, which is very, very important. You don't have to spend excessively. Then seamless cross-border transactions. Yes, there are some licenses or things you don't have access to that your partnership or whatsoever who you're working with will definitely assist you with and make it easier and seamless accordingly. Okay, thank you very much. So going back to Wally now, lovely handsome Wally. So my last question for you today is what should businesses look for in a payment system built for scale?
All right, thank you, Damilola, and thanks for the compliment. Again, so for businesses, there are 5 critical questions that they need to ask. First is one, can my customer pay easily the way they want to pay? And then number 2, how quickly am I going to get my money? How quickly will I get my money after the payment is made? Number 3, can I scale, with the current payment, with the payment system? Can I scale? If my transaction grows astronomically, can this platform support me? And then how is reconciliation? How is it done? For that payment, and then finally, the adaptability of that system. How does it adapt to a new system and possibly to new markets? Because when you think of expansion, you might be, bringing a new system or you are entering into a new market. So for me, businesses should focus on number one, which has been mentioned here, it's reliability and uptime. I want to make payments, just like Ekene mentioned, that we have multiple payment options. But the question really is, how reliable are they? If I make payment today, my payment goes today, tomorrow, am I sure that my payment is going to go through again tomorrow? So that's very, very critical. The system must be able to handle high transaction volumes consistently, with minimal downtime. I understand the fact that yes, for every platform, you have to do your downtime. And for such downtime, usually businesses will do it during the green zone, when, in terms of maybe it's not your peak period. It's not your peak period. We have businesses today that even operate, 24/7. They are open all the time. So those are some of the things that you need to, consider. Number 2, the multi-channel capability. So the perspective I want to bring into multi-channel capability is that, yes, we have multiple channels, but we also have to think of it in terms of what is available, to segments of the society. I was thinking of it in terms of, if you look at Nigeria, for instance, if you look at it in terms of the financial inclusion gap, you know, you also need to have, I mean, that's one of the reasons why we have multiple channels, because if you can't make payment with this, some people are, I mean, just not very used to making payments with card. So they prefer to do transfer. Some don't have internet-enabled devices, but they have their phone, which maybe just the basic phone or the feature phone. They can quickly dial the USSD code, to make payment to you. So you should also have, a platform that supports that, different options of making payments. Number 3, very critical, is security and compliance. How secure is this platform? Today, one of the things that we have access is that we are PCI DSS, certified, to ensure that, we're able to process, customer card information securely. You don't want to go to a platform where, you've used your card for a transaction. 24 hours later, you are getting alerts to say your card is being used, somewhere very far that you've never even been to, maybe Ukraine or somewhere, that, it's fraud happening on your account. So you want to ensure that, the platform you want to use or the payment infrastructure is secure. And there's also the issue of compliance as well. Compliance, how do you onboard? What type of, people do you have also using that same channel? Yeah, if the KYC or the compliance is not strong, it also calls into question, the type of, organization that you are also partnering with. You understand? We also want to ensure that this business that I'm working with, CBN is not just going to go there one day and just shut them down. If your payment partner is shut down, for instance, it means that you have to quickly start looking for other options to collect your payment. So it also must be a consideration for you. I'll look at it in terms of the API and the integration flexibility. How quickly can I connect to this to the payment infrastructure? APIs available. The APIs, do they have the required endpoints? At Zest, we have multiple APIs. We also have SDK, for companies or organizations that don't have a tech team to do the real work in terms of development. So they can leverage our SDK. Once they connect to the SDK, they have access to multiple payment options. And if they want to go through the API route, we also have all these services are also available, as API. How flexible is it? Can I connect it? Can I connect it to my ERP? My current system. Can it work with my existing system? I don't want to look for, because I want to collect payments and then I have to change my internal reporting structure. I have to change my, my current system, my current application. It shouldn't be like that. It should be something that is scalable. That is flexible to join. And then finally, which is also very critical, is the settlement and reconciliation efficiency of that platform. How do they settle? Is it efficient? Is it consistent as well? How quickly do I get my money? We have businesses today that are settled instantly. For some businesses, say, oh no, don't. I want to get my settlement maybe daily. Settle me daily so that I'm able to do. So that my reconciliation, I know that whatever funds I'm receiving in my account, I know that this is for all transactions done yesterday. I can get the other fund, maybe just like that. So you also need to consider that. I think if a business thinks about these 5 things, and you select your payment infrastructure based on them, it's going to help that business to scale as it's when needed. Thank you, Tamila.
Thank you so much, Wale, for this beautiful ideas. And I think if our businesses should follow this 5 feedbacks you've given us, be able to scale and do very well. So, which is a major thing is they should have in mind is, can customer pay easy? I think that's one of the pain points for all businesses. They want their customers to have the best payment experience. Then how soon will they get their money? I think that's even very important. Like Ekene said, I need to get my money. That's the cocoa. That's the thing. And Nigerians don't play with money at all, I'm sure Wale too won't play with his money. Then can I scale and can I be supported? I know that most businesses don't have access to loan or support for majorly people they partnership with and all that. But I think we've been getting a lot of assistance now lately, at least, even if it might not be to the expectation. I think some businesses have been doing better with that also. And also reconciliation and adaptation. It's also very important to reconcile payments and all. Those are the basic needs for all businesses right now. Thank you so much, Wale. I really enjoyed that. Okay, going now to Ibrahim. So my last question for you is how should businesses think about payment flexibility in today's digital economy?
Okay, thank you very much, Damilola. And I think I will answer that question in, three folds or 3 dimensions. When you speak about it's no longer an option because it is directly tied to, retention or conversion. When you are flexible or you have business that has a flexible payment options or maybe system, it's actually directly tied to conversion, retention, and even your profitability. And think about flexibility in these 3 dimensions, like I mentioned. Customer flexibility, I mean, we've spoken about it multiple times, having, I mean, multiple payment options for different categories of customers. Convenience, I mean, when you say customer flexibility, for instance, you already know the transactions that you do on a regular basis. For instance, and then I mean, saved credentials. I mean, look at what Ekene was speaking about, yellow chili. And she said, look, I'm a customer. You should know me. You should know what I want. I mean, that's what customers want. So they already know that, look, I don't have to put in my PIN, or I don't have to put in my credentials for a payment that I know that reoccurs every month. So, I mean, knowing that customer much to be able to say, okay, no, let's authenticate your payments so that next time I mean, today I sit down and I see my Netflix payment is just being debited to my account. Just say the debit. You understand? So, I mean, will I giving me that convenience? I have, how many payments I make recurringly on a monthly basis. So you can imagine me going to in my data or my credentials. So I mean, it's something that helps, customer flexibility. And we talk about operational flexibility. The ability, I mean, I spoke about it earlier on, ability for you to be able to switch provider. You understand? And that's where partnership comes in. You're able to partner maybe one or two, I mean, two or three switching platforms, so that if one fails, you've done maybe an automated routing system that takes you to the other one, and then it scales. I mean, you've done something like a smart routing system that allow your transactions to. And again, I mean, talking about settlement, the settlement circle. So that's operational flexibility. And then we go to the final one, which is the one I tagged strategic flexibility. This one also allows you to launch into markets easily. It allows you to be able to integrate with partners. And then again, I mean, it allows you to be able to offer embedded services. For instance, today, we started hearing about the BNPL, that's the buy now pay later. It's becoming a very common thing in Nigeria. I mean, those are the kind of flexibility that people want. I want to make a purchase, and at that particular time, I do not have that particular fund. I mean, and you're offering me a BNPL to say, oh no, you can make payments and then you do a repayment later. You can imagine how that can meet different needs. Even though I know we're just growing, we're just getting there. But of course, these are the strategic, flexibility that you can employ, and then it will help, in today's market. I mean, for the sake of mine, I think it's flexibility is not just about offering everything. It's about, doing the right thing, and then the customers being able to do their transactions without friction. Thank you very much, Damilona, and thanks for, making me a part of this.
Yeah, thank you so much, Ibrahim. You have a lovely voice. Thank you so much. Really appreciate your point on this. Basically, it's flexibility, switching partners, convenience, settlement cycle, and strategic flexibility. Thank you so much. Before I let you go, we just have a question for you and Wale.
Thank you,
Said, how
everybody.
does Stanbic and Zest work together? You just want to know. You and Wale said, how does
I
Stanbic
didn't
IBTC?
get that, Damilola. I mean, it was breaking. Yeah.
Okay, all right. Question says for you and Wale, how does Stanbic IBTC and Zest work together?
Okay. We're partners. Apart from the fact that we're brothers and sisters, we are partners. And there are quite a number of things that we do together. I mean, for instance, like I said, there's no business that can sustain itself without having partners.
Yeah.
And I think that's one of the reasons why Zest was actually established, as a subsidiary of the bank. So that there are things that we cannot do on our own. There is a skill that we can get to. And today we are seeing the benefits. Zest is a very big partner to us. as a of that relationship. Thank you, Damilola. Yeah.
All right, thank you so much, Ibrahim. What a lovely session. Thank you. Now to the final pretty Ekene. So my last question is, what do founders often underestimate about payment infrastructure earlier?
All right, thanks, Dami. I think Ibrahim actually already gave the perfect answer to this. It's what I'd already prepped, which is basically that payments is a group project. Like if you wake up, you don't just wake up and decide you're going to do payments, right? Like you can't, especially as a fintech, right? As Ibrahim mentioned, you're going to be doing integrations from morning till night. Like, at the end of the day, even if you're trying to build new rails or your own rails, you got to run on some existing rails to just get things going. So I think founders grossly underestimate how much of payments actually requires them to partner with other people and other entities in the ecosystem. And a lot of times those partnerships require the proper documentation, the proper licensing, right? And so it's just not, payments is not, it's not something you just wake up and decide you're going to do. And I've actually had interesting interactions on this topic with some folks who, I talked to some of the businesses I talked to, they've actually shown me previous attempts at building their own payment rails, right, to solve some of these problems I've highlighted where they want the payments to reflect the business logic. And then they quickly realize like, oh, I need 2 billion naira for a mobile money license. And, maybe I should just focus on my core competency. So I would say for any founder that's interested in payments, you should definitely be thinking about partnerships. I think it's actually a great thing. It helps you move a lot faster and go farther because, like, for example, one of the biggest fintechs in Nigeria, like actually Africa, now they're global. I know for a fact that like one of the new products that they're rolling out soon, when they were building it to test it quickly, I don't know if you guys have heard of Blank. Blank is like a ledger as a service company. It's really cool. I highly recommend you check them out. Basically, like you don't have to build your own ledger from scratch. It's like a configurable ledger. I know that this big fintech basically used Blank to be able to build and roll out and test their product basically overnight, like over a weekend, instead of having to build a whole new core banking system. And so they ran on that for a number of weeks or months just to test it, test some initial users, prove out the use case. Yeah. And then from there, they then went back to their own sort of internal system. So I would say to all founders, if you're doing anything that's payments or payments adjacent, don't be afraid of, don't be afraid of, not necessarily, don't be afraid of the integrations and the partnerships, like seek out partners for a lot of the things you want to do. There's already someone maybe likely offering it as a service, right? And so whether it be ledger or banking as a service, you can find partners to work with, like Zest. Like, for example, I'm going to follow up with you guys because I need Google Pay. So I know when Adewale said that, I definitely noted it. So yeah, like definitely partner, but get all your ducks in a row, get all your documentation right, be registered, whatever licenses or approvals or compliance you need to have in place. Make sure that your flows are compliant. If like, and you'd be surprised. I know somewhere I used to work, the way the regulators came after us was because like someone who worked at CBN was doing a transaction just in their normal course of day. And they did something and they were like, wait, I don't think y'all should be able to offer this service. And next thing we got like an email from the regulator, we were getting audited. We were asked to shut this and shut that down. So definitely like talk to a compliance specialist, a regulatory specialist, make sure your treasury flows are compliant, and then partner with other folks in the industry to get up and running soon. But don't underestimate the need for partnerships. Yeah.
All right. Thank you so much, Ekene. I really loved the session. Thank you so, so much. I think we all have learned a lot on this session. Thank you, Wale, too. Thank you so much for the feedback, the ideas, information. Thank you, Olutimi, Ibrahim, too. You guys are so wonderful. Like, I just felt we should just continue having this conversation, but we have to let you guys go. Thank you so much. It's a wonderful session. To have a lovely day. Thank you, everyone. Thank you.
Thank you, Jeff. And
Thank you so much. Thanks for having us. Thank you so much. Have a lovely day, everyone.
Thank you.
All right.